Good morning, you're welcome, and you're watching Bloomberg Bottomline. I'm Minnie Menon, and these are the top stories at this hour. Prospects of a delay in Fed rate hike powers a rally in Asian markets. India follows suit. The Sensex rallies led by buying in capital goods and bank stocks. The Nifty surges to the highest level in over a month. Maruti stock slumps as Jefferies downgrades its stock to underperform. Tata Motors soars on reports of an alliance with Peugeot. Bajaj Auto sales drop 4% in September. SBI protects its margin, says home loan rates will come down only 20 bips despite the 40 bips cut in base rates. The government moves to end the Discom distress. PTI reports that the cabinet may consider a proposal to recast 4.3 lakh crore of loans of 9 state power distribution companies. On the show today, we have two big focus areas. The first is really on the banks and the transmission of rate cuts, especially on the back of news that banks might be also looking at their own balance sheets by ensuring spreads in some of the loans and the more popular loans. We will be getting you more on that, and we will be talking to Vaibhav Agrawal of Angel Broking. Also, in focus are the auto sales numbers ahead of the festive season. Is there any pickup? Well, we will be getting you another voice from Angel on that. This time, Bharat Gyanani of the sector. But as always, let's start and put the spotlight on what's happening as far as the markets are concerned. A very good session of trade. 80.59 on the Nifty, led by Tata Motors, which is up about 19.5 rupees in trade today, followed by HDFC and ICICI Bank, and Larsen & Toubro also pulling its weight up 3.5% in trade today. Let's quickly look at the market movers. Pranoy joins us with more on that. Pranoy.
Well, if you talk about the benchmarks, quite a smart up move seen in today's session, and many analysts were obviously saying that 80.50 level and scaling that and holding out above that is important. The Nifty is doing pretty much that for now. 80.61, if you can see on your screen. The Bank Nifty is one of the lead sectoral gainers for today. The member components of that and some of the larger weights there, ICICI Bank, Kotak Mahindra, HDFC Bank, all of them seeing good gains in today's session. The Bank Nifty is above that 17,500 mark now. ICICI is up 3.4%. You've got Kotak Mahindra, which is up almost 3%. There's HDFC Bank also, which is posting gains. So pretty much most of the member composites of that index are in the green and up and with healthy gains right now, decent volumes. Talk about the mid-cap space. There are certain counters like HCC to which your attention is drawn because there's been a lot of bulk deals on HCC. So HCC is up almost 14 to 16%. There's Force Motors, that counter has been seeing solid gains, and today really amplifying those gains in terms of volumes as well as price. 2800 is where the stock level is, and the stock is well and truly up 15%. There's Lanco also, which is gaining in trade today. Lanco's up a good 9 to 10 odd percent. As also we have a counter like GCPL, Godrej Consumers from the mid-cap space, which is seeing decent amount of gains. Special mention for Tata Motors as well, after a long grueling period of cuts that we've seen on that counter and being sub 300. That counter's up there for you on the screen, up 6.5%. But primarily we are seeing gains coming from the Bank Nifty, and the Nifty right now supported at 80.50 and above that. Let's see how the second half pans out. Back to you.
Right, thanks so much for that, Pranoy. As you can see on your screen, we also played out visuals of Prime Minister Narendra Modi with the German Chancellor Angela Merkel. Meetings are on, big MOUs are likely to be signed, and we'll get you details of that. Also, as you can see on the flashes, there is going to be an attempt to fast-track a lot of investments into India from Germany. The government on an overdrive. Remember, at noon today, we will be also having a press conference in New Delhi where all the top leaders are going to be, all the top economic secretaries and also the economic advisor to the government. They're going to hold a press conference on H2 and the road ahead. So watch out for all of that and what the government has to put out. But let's put the focus on the banking sector. Don't be fooled by the big base rate cut. The transmission is actually a lot lower. Dwindling credit growth and rising bad loans have forced the nation's banks to reconsider. In fact, India's largest bank, SBI, is reworking its spreads. only a mere 20 basis points of the rate reduction has been transmitted to the home loan borrowers. Now, bank stocks are rallying as this indicates that margins will be secure even as headline reduction continues. Now, to discuss this, we are joined by Vaibhav Agrawal of Angel Broking. But before we go to Vaibhav, who I must say thanks, Vaibhav, for joining us today. But before we come to you, let me go across to my colleague Shraddha, who joins us with the details of how the base rate cut has stacked up, because over the weekend we had at least 7 to 8 banks come up with base rate cuts. So let's quickly put that in context. Shraddha.
So just days after the big 40 basis points cut announcement coming from SBI, now we have a clarification coming in which says that the bank is passing on just 15 to 20 basis points of the rate cut to home loan borrowers. So the effective transmission from SBI from the start of the year is closer to now just 50 basis points versus the RBI's repo cut of 125 basis points. In fact, the hesitation of the rate cut has been seen even in the largest mortgage lender, that is HDFC, who has still not cut rates despite banks across the board having announced rate cuts, and the base rates are now anywhere ranging between 9.3 to 10%. In fact, SBI had indicated a drop of 40 basis points will actually hit their margins by anywhere between 10 to 15 basis points, and now with the spread on the home loan rising, the hit actually will be lower. So the shareholders are going to be glad about that, even as the consumers are not, as margins have actually been under tremendous pressure for SBI, dropping consistently to 3.29% in the quarter gone by. So we are seeing banking stocks, especially the PSU pack, all of that rallying on the hopes of margin protection coming in.
Right, thanks so much for that. Let's get Vaibhav into this conversation. He's, of course, Vice President Banking Research at Angel. Vaibhav, thanks so much for joining us. I'm going to start by asking you that, you know, after 125 bips cut by the RBI, the transmission in the banks have been slow. But post this latest 50 basis point cut, we did see a slew of banks coming out with base rate cuts of anywhere between, 25 to 30 bips. How does it stack up for you looking at that, that line of transmission?
Well, as we've been saying in the past as well, clearly, lending and deposit rates ultimately do not just rely on, the RBI's, rate cuts, but, ultimately the demand supply, in the market as a whole. And, it requires the cost of funds to come down, and one also has to see the competitive landscape. Like you were mentioning about the SBI, home loan rates not being reduced by the same quantum as the base rate. I mean, ultimately they were already, below, the rest of the system on their home loan rates. And, ultimately every entity needs to have an eye on the competitive landscape. And we've seen this in the past as well, ultimately through credit risk premium or tenor premium or such other things. You can actually manage, your interest rates to an extent. Of course, in case of home loans, it would be a little harder to justify, considering that the credit experience in home loans has also been quite good in the last, few years. But, ultimately that is what we've seen, that competitive forces matter far more, than just the, policy rates.
Right, let's get a little more specific, Vaibhav, and look at what SBI has done. Their base rate is among the lowest in the system at about 9.3%. Now they have, not transmitted the entire 40 bips cut, but really allowed a spread and only transmitted 20 bips cut. How will this compare with others? Because this is also one of the most competitive segments at a time when retail credit or credit on the whole is not picking up. What is the rationale for SBI to do it? Is this an indication that it might get away with a high spread and still not have an impact on on the demand for retail loans?
Well, like I mentioned, it's about the competitive landscape, and SBI is already, at the lower end for all its products, whether to corporates or even on the home loan side, they're already very competitive. So they're unlikely to lose market share at even these rates. So that is the first thing. And the second thing is, what we've been seeing in the last 6 months, even prior to the latest RBI policy cut, that banks have been hesitant to pass on base rate cuts, because, the big part of the system, which is PSU banks with 70-80% market share, they are grappling with NPA issues, they are grappling with less capital. So really, in that kind of a situation, it does not make sense to aggressively pursue loan growth, when you don't have the PNL or the capital to really back it up, and that is a part of what we are seeing. which sort of reflects the fact that why the policy rate cuts have not been fully reflected at the end user interest rates.
Okay, so do you think this is it? This is going to be it, because we don't have the we still don't have the rates from the largest lender, which is HDFC in the home loan rate segment. Is SBI is going to set the benchmark or the floor for home loan rates, you think?
Well, no. I mean, one has to wait and watch how this is it's a dynamic market. So it's always possible that an HDFC may come up with a lower rate, and then there is always room for SBI to launch a special scheme during the festival season for better home loan rates. So ultimately it's a market, and like I've been saying, depending on the competition, there is always scope for pricing your product so that leeway is always there. The base rate is quite a transparent sort of a system, but even within that there is some bit of wiggle room for banks to manage with the competitive landscape as well.
Now, given the precedent that SBI has set, Vaibhav, do you see other banks also, being a little careful, looking at their balance sheets, ensuring some bit of spreads on specific loans, because the market seems to have believed that, and a lot of the bank stocks are up. What is the sense that you're getting?
Well, I mean, it is possible. See, ultimately the fact is that banks are not, especially the PSU banks, are not really, I mean, and there is no justification as well for them to very aggressively compete on loans when their balance sheets are, in the kind of damage that they are right now. So we may, this is what we've been saying in the last 6 months itself, that the competitive intensity in the system is not very high, and which is why private banks with better asset quality have been actually able to do quite well on the ROE front. So it's the NPA which is the differentiator. On the NIM side, there is not really much competition right now, too much of intensity to aggressively compete on margins.
Fair enough. The other bit of news is that the government is aggressively working at some kind of a bailout for discoms, restructuring of loans worth 4.3 lakh crores for 9 states. We're expecting news this week, Vaibhav, on that. How does it stack up for the banking sector? And looking at the balance sheets, which are the banks which are likely to be most benefited by something like this in terms of exposure to discoms?
Well, we have to again wait and watch what is the contours of that. But, if it does happen, and, ultimately over a medium term, we also do believe that, amongst the various stress sectors, the power sector's problems are more internal to the country, and they can be resolved with the appropriate political will and consensus. So, if that happens, that would be, incrementally a positive for the banking sector, especially, the PSU banks, which have the higher degree of exposure. Within PSU banks, more or less, there is not much difference between one or the other PSU banks. All of them have decent amount of, or almost all the larger banks have a decent amount of exposure to SEBs. So there would be a benefit to, virtually almost all of the PSU banks if the, deal fructifies. So that would be an incremental positive. The sectors which are negatively burdening right now, which would continue to do so, and which have in fact become worse in the last 3 months, is, from areas like metals, where the situation has actually gotten worse.
Fair enough. I'm going to ask you, among the bank stocks, Bank of Baroda has been the biggest outperformer in the 3-month period, Vaibhav. As things stack up, what are your top picks in the banking sector?
Well, actually on Bank of Baroda, we are neutral right now, because we do believe the valuations are a little bit ahead of the fundamentals, partly on account of a little bit of hype in terms of, the management change and such other things. But we do believe that, the valuations are a little bit ahead of fundamentals, so we are neutral on that. In fact, within the PSU banks, in spite of the base rate cut, etc., it's SBI that we are still, relatively positive on. Stock has underperformed to an extent, and valuations at 0.9 price to book to us, from a more medium-term perspective, and considering the larger, more diversified balance sheet and slightly improving asset quality over the last few quarters, SBI is the one we would prefer within the PSU banks. But within the sector as such, our preference clearly remains for the private sector banks, and considering some of them like Axis, ICICI, etc., have corrected from their highs, we believe that's a good buying opportunity, because from a 3-year perspective, their earnings growth outlook remains very strong.
Yes Bank's base rate is still 10.25%, Vaibhav. What does this mean for a bank which is so aggressive and has been an outperformer, up about 15% over the 1-month period? How does it stack up? I mean, is it going to lose out? Will it be forced to cut rates? What sense are you getting?
Well, with Yes Bank, they have, in spite of having a lower CASA ratio and higher base rate, they have managed to grow their balance sheet across last so many years. And again, it's not just the base rate that one has to look at. Ultimately, Yes Bank is, excuse me, just 1% of the system right now. So there is enough opportunity for a small, nimble, well-managed bank to find opportunities. It's not that they are doing their entire lending at the base rate. There is a lot of scope for them to find opportunities in the corporate space itself, and of course their retail business is also slowly growing up. But as they've shown in the last few years, we believe with their kind of size, they should be able to maintain their growth and continue to find relatively more profitable opportunities than the average in the system. So it's not just the base rate that is going to constrain them.
Last question, and very quickly, in the last 1 month, the Bankex is up about 8.5% to 9%. Vaibhav, is the worst over for banking, and you think from here on you will only see accumulation? What's your overall call on banking?
Well, the biggest positive for the banking sector, as also the economy, as such, is the fact that inflation has been brought under control to a large extent by RBI. Even their own, optimism for the 2017, Jan 2017 targets or 16 targets, they believe that inflation, apart from seasonal factors, is to a large extent under control, and that is positive news for the banking sector. It sets the ground for ultimately a revival to happen. And the other side of it is the government reforms and the government push on infrastructure, etc., would create demand over a period of time. The private sector investment would remain a concern in the near term, but overall directionally things are improving for the banking sector. Again, asset quality, like I said, metals is something which has deteriorated, so still cautious on the PSU banks in the near term. But if one is looking at private sector banks, I think the outlook is improving directionally. So we would remain optimistic on those stocks.
Okay, fair enough. Thanks so much for joining us, Vaibhav. That's a quick analysis of the banking sector and the top picks from Angel out there. But stay with us, because after the short break, we will make sense of the auto sales numbers that we have seen trickling in over the weekend and from the first of the month, and look at whether the worst is over and what's really happening on Tata Motors. Does a Peugeot deal really make that big a difference? We come back and ask Bharat that question. Welcome back. You're watching Bloomberg Bottomline. Our focus is on sectors. The markets are doing very well. The Nifty and the mid-cap index are both up sharply, taking cues from the global markets. Asia's had a pretty good day, and that's a quick snapshot of the markets. Bank and auto stocks are in focus on this show. We discussed banking and got your view, but let's put the spotlight on auto. Auto sales remain subdued in September, raising concerns over the long-awaited demand pickup. Weak monsoon rainfall also has dealt a bit of a blow to the beleaguered sector, dragging rural consumption lower. So as we step into the festive season, is there hope for a revival in consumer sentiment, especially now that rates are also coming down? Well, to make sense of all of this, Bharat Gianani, auto analyst at Angel Broking, joins us now. Bharat, thanks for joining us. I'm going to start by asking about Tata Motors, which is really the star of trade today. Now, there are two bits of information that's come in on that. One, of course, the immediate news flow has been that whole tie-up with Peugeot and the possibilities of that. But I'm looking at the sales numbers, both of Tata Motors and JLR. What's interesting is that the medium and heavy commercial vehicles have seen a pretty good spurt of about 52%, while everything else is low. And in Tata JLR's case, sales are up about 61% in September. So can you give us a sense of what your own analysis is on Tata Motors right now?
Good morning. Definitely the domestic segment of Tata Motors, particularly the MHCV segment, saw a good amount of growth in the domestic numbers for the month of September. But the MHCV sales was primarily due to pre-buying on account of the new safety emission norms, new safety norms that kick in from the month of October. So the MHCV industry per se saw a spurt in sales in the month of September. So that was one part about the domestic segment. Also, the JLR saw, as we know, 61% sales growth during the month in the US market. So that is primarily attributable to new product introductions, and also the base in the corresponding period of month last year has been on the lower side. So these two factors coupled have resulted into higher growth for JLR in the month of September, particularly in the US market.
Is this a bit of a game changer for Tata Motors, because it's really been a laggard in the market, though a lot of brokerages have had a kind of a value pick take on this because of the sheer fall in valuations? What's your fundamental call on Tata Motors from here?
As of now, although the developed markets have started to show a bit of a growth, but then really the China and the other markets which are dependent, China, we have seen really a slowdown coming into the volumes of Tata Motors. So China currently accounts for about 20% of the overall volumes. Plus we have another 10 to 15% contribution of the volumes coming from the oil manufacturing nations, which are really dependent on oil, which is like to the likes of Russia, the Middle East, and other countries in that region. In that region also, because of the dip in the crude prices, we have seen the demand really slow down in that regions. So as of now, the pressure continues to remain on China and the other markets such as Egypt and the Middle East, which are and Russia as well. So that pie forms about 40% of the overall volumes for JLR as of now. And unless this kind of markets start to rebound, which may take some time because the economy has slowed down. So unless this kind of markets see a demand revival, we may not really see the overall sales picking up, at least in the near term.
Okay,
so,
Bharat, I've got a couple of questions, so I'm going to run past a couple of other stocks. There has been a downgrade on Maruti, a lot of concerns raised out there. What's your fundamental call on Maruti, which has been an outperformer?
Maruti, we are very bullish on the counter. We have seen the company continue to gain market share on back of new product launches. So we have seen the Ciaz, evincing a very good response for Maruti, and it has allowed the company to sort of set a foot base in the premium, in the sedan segment, where it was relatively a weak player. Also, the launch of S-Cross last month will also help to the company to fortify its position further in the sedan space. Also to fortify its presence in the compact EV segment, which has seen a sort of good growth coming in the overall passenger vehicle scheme of things. The company will launch a compact.
Fair enough. So you're overall bullish on Maruti.
On the stock, yeah.
Okay, great. So I'm going to ask you very quickly, what's your top pick in the auto segment? Because if I was to look at a 3-month period, Ashok Leyland is up 30%, over 30%. And the lowest is really Tata Motors, down 27%. But I want to ask you about Ashok Leyland specifically and your top pick in the auto sector right now.
Specifically, amongst our top picks, we continue to prefer Eicher Motors in the automotive space because we foresee that the kind of volume growth the two-wheeler business is saying will continue. It's the 50 to 60% growth is sustainable for Royal Enfield, at least for the next 2 to 3 years. And the company, despite a huge capacity expansion, still has an order backlog of 5 to 6 months currently. So we see the two-wheeler business, really doing well for Eicher Motors in the next 2 years. Also, the CV side of the business is also over the next last 2 quarters has been showing a good volume improvement. So basically, the two-wheeler business coupled with the increasing the turnaround fortunes in the CV segment both the things bode well for the company. So Eicher Motors is the top pick for us.
Okay.
We are also positive on Ashok Leyland because the company has been seeing a good turnaround in the MHCV segment.
Fair enough,
it's
Bharat.
a pure MHCV play.
Okay,
Yeah.
fair enough, Bharat. We are completely out of time. Thanks so much for joining us with your take on these stocks. That's the take on the auto sector and the top picks from Angel. We leave it over here. Thank you so much for joining us. Goodbye.